What's up, guys? Welcome back to my YouTube channel. Thank you so much for clicking to watch the video. Now, like I said, this may be the most important video that you have ever seen on binary trading, and this may just be the key that you need to begin to make consistent income in binary trading. Now, if you're distracted, maybe you should just go do something else. This is the kind of video that you want to actually sit down, take your time, and concentrate and watch, because a ton of secrets are revealed in this video, a ton of them, and it's from our paid training program. I just decided, okay, let me give this out for free to those out there, so concentrate on the video. There's so much shared in the video. It's a little bit long, but like I said, grab food or coffee or something and sit down and take your time and watch it if you really want this information. This may just be the turning point. So thanks again for visiting the channel. Please like and subscribe, and let's get right into the video. Good morning.
Good morning, I'm hearing you.
Okay, sorry about the delay.
Yeah, no problem. Good morning. Long time. How are you feeling now?
My brother, you know how Nigeria is. You have to be strong.
Yes.
Because there's so much to meet up with.
Of course.
Well, how about you now? How is family?
Yeah, we are doing great. I put in $20 the other last week. The money got burned, so that's very. I put in another 20 something yesterday. It's almost burnt too.
20 something yesterday.
Yes.
Okay.
But I caught some of them yesterday. At least there are some trading hours you advise not to trade. I went ahead trading. So I noticed that the direction was not consistent. So that was when I bought the account went down. During the time you gave, it was okay. I took it from, I put in 29 yesterday. I took it to 37 at a stage before I knew what was going on. The thing went down to 5.
It's well. Congratulations. At least you are learning something.
It's just that presently, I don't really have money to be throwing away like that. But at the same time, I really want to learn it. I'm not moved. But I just wish I can get some peace on. So that was why I said, let me call for a training. I still need I have some questions I want to ask.
By all means, please ask the questions. But before that, let me just say something.
Okay.
I'm sure you can see what I'm doing. I'm sure you can.
Hello?
Yeah, I said, I'm sure you can see what I am doing.
Yes, I'm seeing it.
So that's me adding the lines.
The lines, yes. Daily, 4 hours, 1 hour. I do all those.
Exactly. So that is this process is a manual process, but it's very important, because when
some of the lines you draw now, I'm trying to, okay, I'm seeing it. You mostly draw the lines on the turning point, right?
That's in fact, that's where I put it.
Okay,
that's
I'm seeing it.
Now, the trick is that I try to put the lines, the turning points, the recent turning points. Okay. So that's the reason why every day when I wake up, every day I will trade. When I wake up, I delete yesterday's one and start again.
Okay.
You understand?
I've not been doing that.
Yes, I delete yesterday's one and start again. Because between early morning and this about 10, when usually I start trading, the market must have moved.
Yes.
You understand? So it's that movement, the things that happen from maybe the previous night to this morning, all those movements, those turning points, That's actually
Okay.
where I actually target. So it's not just all the turning points. It's like the recent, at least the last
Okay.
24 hours turning point.
Okay.
Then of course for daily, since daily is a higher time frame,
Okay.
I'll of course draw for daily and 4 hours. But when I now get to the 1 hour and the 30 minutes, really it's
Okay.
just like the recent turning points, the ones that usually
Okay.
fall into the last about 24 hours.
Okay.
Mhm.
Okay.
So that's why when I look at the lines,
Okay.
it's very, very easy to just see what wants to happen. It's almost like as if you are seeing a picture of what wants to happen next. The only
Mm.
problem is this: when it's not consistent, is when outside those times that I mentioned, that's usually
Okay.
when it may not be consistent. And the reason
Oh,
is outside those times, you have
okay.
more volume. It's like the market
Oh,
has not settled down for a particular direction.
okay. So it misbehaves.
So it may be not necessarily misbehave, it's doing its thing. You understand? It's
Okay.
doing its thing. You get, because now what is causing the exchange rate? Causing the exchange rate is changing based on financial data that is coming in. In as
Okay.
much as
Yes.
a lot of the financial data um, is real time, not all of it is also real time. So usually after that, at about this 10 o'clock,
Okay.
majority of the data has already come in. So you already have an idea of the direction. Because what's
Okay.
happening in the banks, they are relaying what has happened. Some of it
Okay.
will still be manually, not all just instantly automated. So
Okay.
you can already
Okay.
see a direction that, okay, for now, up to this time, the majority of maybe financial transactions has already
Okay.
gone in favor of this particular
Direct.
nation, that's in favor of this particular nation, maybe like
Okay.
Europe or Germany or Japan or US, you get. So you will now see that in terms of the candlestick, the chart of that, you will see that it will either be up or down. If, for example, now we're looking at maybe pound USD as I'm looking at right
Okay.
now, you will notice that for pound USD, if
Is
let's
this
say
the
we are,
daily? Is this the daily candle?
eh?
Is this the daily candle?
No, it's 1 hour. It's
Okay. Okay.
indicated at the top. Yeah, you
Okay.
can see it. So
Okay, I'm listening.
so in the daily time frame, you now see that okay, if we have had more people, doing transactions, converting pound to dollar, you see that that day, when that day is around this time, 10 o'clock, you see that it will
Okay.
be a bearish day. Why, if you have had more transactions of people converting dollar to pound, you see that it will be a
Okay.
bullish day.
Okay.
You understand?
Okay.
So that's actually what's happening. These things. It's not really rocket science. It's just by observation. After a while, you now begin to know that okay, this is how this should play out. This is how this should play out. That 4 to 5,
Yes.
3 to 5 in the evening, when sometimes I trade, is also as a result of cool. It's like the market is now cooling down. You get, because around that 12, 1, 2, sometimes even still about 3 safe, the momentum on
Okay.
the market is very high. In fact,
Okay.
if I'm to trade around that 3, it should be that
Okay.
it's consistent with what I saw in the morning, and there's minimal news around that time. So what that means is this: if, for example, like today now, as at this point, for euro and for pound USD and euro USD, for the two of them, the day is still looking, at least up to this time, it's still looking bullish. just like
Yes.
yesterday. You know, if
I have a question.
Yes, go ahead.
As it's looking bullish from the chart, you know, there is a video you posted that I watched. You said if the daily candle is looking bearish and the trend is looking bullish, can you explain that aspect? If the trend is bullish and the daily candle that formed is looking bearish.
I don't know whether that's exactly what I said, though. But,
you said once you look at the daily candle, whatever direction is going should be what one should use to make decision for the day.
okay, that video where I talk about market direction. Okay.
Yes,
Okay, so for that
yes.
video, that what I said in that video is what I'm actually saying now, which is that the reason why I trade from 10 to around that 11, then from 3 to 5 is because I wait till around that 10 to see the predominant direction of the market up to that time.
Okay.
So if as at that time, as at 10 o'clock, we can see that, okay, the open price is lower than the current price as about 10 for Euro USD. That gives me an idea that, okay, this is a bullish day. Not that it may not be bullish for the whole day,
okay,
but at least between that hours of 10 and 11, when I'm going to be trying to trade, I'll be looking I'll be looking for bullish opportunities. That's opportunity to buy.
To buy, okay.
Yes, because just like today now, if it gets to 10 o'clock and the price is still bullish, I'll now be looking for opportunities to buy. And guess what? It's not just looking bullish. Around that 10, the difference between the open price and the close price should be at least 20 pips, 20, 25. Usually I prefer 25.
Okay, these are additional tip.
You get at least 25. That means it has actually moved. It's not like it will now be 10 pips. So those times when you see me putting signal is unclear, you like yesterday, pound USD is unclear, but for Euro USD is for Euro USD it is clear bullish. Why I said that is because around that 10 yesterday, pound USD had not really moved from open price.
Okay.
You understand? Even though it's continued buying, you know, just the way Euro was buying, you know, but it was not as strong in momentum as Euro USD as at that time. So in such cases, that little difference, sometimes when you now follow such a trend or such a pair like that, even when you see clear opportunity like that, you may find out that when you enter the trade, you may need to hold for a longer period. That means you may enter the first candlestick and it doesn't buy. You enter this, maybe you're looking to buy. You enter the first candlestick, it doesn't buy. The second doesn't buy. Maybe the third now buys. But if you are using martingale like that, and doubling on your account, by the time you get to the third, even if it's that one works for you, your profit will be very small. So so accuracy comes into it. So that's why you actually select. You know, people, the market is 24 hours, but in reality, the real opportunities to trade sometimes you may not even see in a full day safe. Say if you are following principles to trade, sometimes the whole day you won't see anyone. You just have to abandon that day.
Wow.
You can see that it's 24 hours, but the times I'm trading inside is just, in fact, it's less than 4 hours.
Yes.
In fact, a lot of times, if in the afternoon there's news, I'll just skip it. If you go back and check Forex Factory for yesterday, you'll see that for yesterday, the price as at The news. Let me open it so that I show you. Let me just
Okay.
open it and show you what I'm talking about. Okay, so can you see my screen? Can you see
Yes, I'm seeing.
Forex Factory?
I'm seeing it.
Okay. So let me go. This is today now for Forex Factory. You can see that the next news is by, we just had an event come up by 9 o'clock
9.
for
Okay.
Euro, you know. The next one is by 11,
Okay.
pound USD. After that 11, the next one is by 115.
Yes.
You know. Then by 3, we have a news, US. And this is kind of situation whereby I may not even trade between 3 and 4 at all. So you can see this event by 3 is
Okay.
medium impact expected. Medium impact means that it's something that can actually move the market.
Okay.
The yellow one is low impact.
Okay.
You can see this yellow one's low impact. The red ones are high impact. Those ones have effect. Those are the points whereby someone will be trading and it's looking like the market is not making sense.
Okay. Okay.
Yeah, so by that 3, we have existing home sales and it's medium impact.
Okay.
You can see by 130.
So,
By 130, we have a red one there called retail
yes.
sales.
So that one is high impact.
That one is high impact. Someone may be trading a USD card since morning, and the thing is just making sense for him. Maybe he's just trading it like normal Forex. He bought, it's making pips, you understand? And he doesn't take notes that on social time, this thing
Something.
is supposed to happen.
Wow. Okay.
Just like that, the market can just change direction, and he'll be wondering. The market may later on finally go back, go the direction he was expecting. But at that moment, he may have already lost his money.
Wow.
So that's this small. Let me show you yesterday. That's why we came here. They'll show you yesterday why it looks as if yesterday was so nice. As you can see, this was yesterday. If you notice, you can see US dollar. It says bank holiday all day. Can you see that?
Yes, yes.
Now, bank holiday all day, no economic impact. What that means is the way, from experience, such days like that are like days that events will just be normal because it's a holiday.
Okay.
You understand? During trading times like that, a lot of times things will just be normal, no crazy movement because it's a holiday. Especially for that US dollar that is having that holiday.
Okay.
Then you can see that the times that we traded, there was no news. The 9 o'clock, it was not, it was somebody was speaking in their house. You understand? Low impact. From that, the next one was 2 p.m.
Yeah.
You can see it. The 3 o'clock that we traded, there was no news then. It was 4 o'clock. It was just someone speaking. Even though that 4 sharp, it was it was expected medium impact, but we didn't even trade till 4. So it was between that 3 and between 3 and something. That's when, and we stopped there. You know, so these are some things that happen. So for today, you know, this morning now, one can also from that 10 till one may expect that okay, things should be in normal state.
Okay.
So just a minute, let me go back to this. Yes, something else I wanted to mention to you. Now, the way I draw these lines, you know,
all right,
you could actually draw yours exactly as I do mine, or modify yours to suit your own taste. Like initially when I started, I was using white for daily and 4 hours. So that my white lines, once price is approaching those levels, I know those are strong levels, very strong levels. You understand? Then I was using blue for 1 hour and 30 minutes.
okay,
You know, then orange for 15 minutes.
okay,
Then red for 5 minutes.
okay.
So that's how I was doing it. You know, so then every morning again, I delete and change
Delete
again. But now, but then when I was doing that, I was using the open price of the day. I was just putting it as white also. But now the open price of the day, I've changed the open price of the day now. I'm now using yellow for the open price of the day. So you just see one line on my chart that will be yellow. And that's
yellow. Okay.
yes, and that one is for the open price of the day.
Okay.
You get now, I just recently included that. And the reason is this: the open price of the day is very important. Even if, let's say by 10 o'clock, you see that, okay, the market price is bullish and all of that, you have all the signals.
Okay.
If the price after that 10, between 10 and 11, the price starts dropping so fast, you understand? And it's now approaching the open price of the day. You probably want to stop. If the price, let's say, as at the time it was 10 o'clock, the market was 25 pips above the open price of the day.
Okay.
Then by 11, or even before 11, the price is now within 10 pips to the open price of the day. You should stop trading in that direction. It means that that day's trend is trying to change.
Okay.
Now, you may not observe that if you draw all your lines as white, white, white.
Okay.
That's why I've now included yellow for that particular open price, so that I can see if the price is, because as you are trading, you understand, your attention is all on it. But you are looking at the charts. If the charts are not, if there's no distinction, you may not even know that this white line that this thing is hitting right now is is the open price, or it's getting close to the open price.
Yes.
You understand? So what all these things I'm telling you now, no one taught me these things. These are things that over time, with from experience, you know, I now began to realize that, oh, it's better you do it this way, it's better it's done this way. The key thing is, a lot of people for trading, they expect maybe something fixed. It's not really fixed. As the situation arises, you adapt with it. It's just that there are more than enough indicators, tools that you can use to, okay, say this should do this or this should not do this. Like yesterday, if you observe the charts that I wrote yesterday, between that 3 and 4, there was a place where, even though I said the trend was bullish, there was a place where I sold. The first trade I took there, even though the trend was bullish, the first trade I took was a sell. And that was not supposed to be, because you're supposed to be going in the direction of the trend. But I sold there because that level.
So once the trend is bullish, I shouldn't enter for a sell at all.
Yes. So, but for me, that yesterday, I even wrote it. You can go back to the Telegram.
I saw it.
You understand?
I used to do both. When I think when RSI and stochastic is telling me a change of direction.
Okay, for me, I don't do that. If you do like that, if you are doing like that for both, at the end of the day, your results will be inconsistent, and you will end up losing money.
Okay.
Because it is always easier for the market to move in the direction of the trend compared to moving against the direction. That thing I did yesterday was an exception, was what you call the exceptional case, and I explained the reason why. The reason was there were several reasons. One of them was RSI and stochastic. Both of them were both in overbought. They were at the 80 level at the same time. That's overbought.
Okay.
Number 2, that level that the price got to, there was a 1 hour resistance there. There was a 30 minutes resistance there. There was a 15 minutes resistance there.
At the same point.
You said?
At that same zone.
At that same zone.
Okay.
See why that was the exception.
Okay.
I had too many reasons to take the trade, and the moment I took it, it worked out. You understand? Even though after it sold, it just sold that particular candlestick, it continued buying. But that level was so strong that at least it needed to react to it before continuing.
Okay. I get that. I think that is also part of the mistake I make. Once I see stochastic and RSI, I just jump at it and change direction.
For that stochastic and RSI, I use for the two of them.
Yes.
When I started using them for RSI, I was using 70-30.
But I notice you have changed it to 80-20 now.
Yes, you understand. But after a while, I said, let me just leave both of them at the same level.
Okay.
I noticed that, yes, they work, even at that 70, yes, they work, but you have more what you call false signals, or delayed signals at that 70, meaning that it's not like it will not sell, but you will find out you may end up holding your position for quite some time.
Yes.
And that holding position is more capital.
Yes.
You understand? And that's what usually we don't want.
Okay.
It's more capital, and that's what usually we don't want. We want to just enter, and if the first misses, the second should go through. And now I'll tell you something that is very, very key here.
Okay.
Because the mathematics need to make sense.
Okay.
So now, what's the thing that is very key? At this your level now,
Okay.
You shouldn't be doing more than your martingale. You shouldn't be doing more than twice. Meaning that, let's say you're entering a trade with $5.
Okay.
Meaning if the first candlestick, maybe the first one does not buy,
Okay.
You enter in again with about $10, for example. That's martingale.
Okay, I know.
So you enter in again with about $10. So if maybe that doesn't work, you probably now enter again with about $20.
Yes.
Now, in that kind of situation, when the trade goes against you, what you were targeting, which was $5, you end up losing 7 times that amount in one trade. That's not good.
Okay.
You understand? So even if maybe you have had situations whereby after holding 3 times, that third one where you used 20 now worked, and temporarily you felt satisfaction. It's not it's not something to do. The best is to stick with 2 times. Now, if you stick with 2 times and it still doesn't work, let's say you use 5, doesn't work. You use 15, it doesn't work. Don't move to 20. If you must keep on holding, go back to 5. So that worst case scenario, you understand? You recover at least 1. At the end of the day, maybe your loss will now be like $10. You understand? Then you can continue like that. You can easily recover $10 with 2 trades. You get, compared to you trying to recover 35.
Wow.
Are you seeing it?
I'm seeing it.
So these are some small tricks inside the whole thing. You understand? There are sometimes that when you do the first and the second one, it doesn't work. Just leave it. That, yes, you have lost 3 stakes, but leave it like that. It's very easy if you are following the rules for you to make 3 successful trades. It's just patience. Within those hours of trade, you just wait for the good opportunities and you take all of them.
Wow.
Sometimes within 10 and 11, sometimes some days you may see as much as 5 opportunities. Especially when you come down to when you are looking for the opportunity at 5-minute level.
Okay.
You understand? You know, most of the time, most of these trades that we do inside the Telegram group is 5 minutes level that I'm actually get. At that level, you may see within those, you can see up to 5 that will all work as far as you are in taking them in the direction of the market. The only thing is that some of them may happen fast. But like I said, if you concentrate, if you are there with the market, you are observing, it's just 2 hours. Or in fact, less than. It's actually a period of 1 hour in reality, from 10:10 to 11:50. It's less than 2 hours, actually.
1 hour, 40 minutes.
So you're just waiting up, you're observing. Once the opportunity comes, you enter. Once the opportunity comes, you enter. Once the opportunity comes, you enter. Yes. The days when the opportunity is not clear, you stay away. Overall, you will find out that you are profitable. You don't need to take much risk on any single trade. That's just that point is very key. No single trade should give you a large loss. If you can find a way to avoid having any serious loss on one single trade, you are good to go. I know that, yes, usually when someone, when you lose on a particular trade, you know, the eagerness to, oh, I want to recover it back and all of that, you know, you get better.
It leaves you in the account.
You understand? But one needs to work on that. Try your best not to fall into that trap, because there will always be another trade, there will always be another day, and there will always be another opportunity to make money.
Wow.
Get it? That's why you see most of the time when we're in that distance, 2 trades and you see, I say I'm done.
Yes.
2 trades and sometimes 3, I'm done. Because I know how this thing is. It's not by trading. It's by following the rules.
Okay, and the trading capital.
Yes, and your trading capital too.
Wow.
Yes. Those trades whereby, okay, I'm trying to grow a small account. I'll give you an idea within those with those tricks. Let's say, for example, I have $100.
Okay.
Now I want to turn maybe $20 to $2,000, for example.
Okay.
Like in the last video that I did.
Okay.
I could start with $20. Get. I take my first $20. Look for a good opportunity. I take it, I double it the first time, I compound again, I double it again. You understand? Take note
But what if that first time failed?
Remember, for me to enter into trying to do something, I probably have $100. I'm just using this as an example.
Okay.
You understand?
Okay.
So in my mind, this $100 is what I want to use to pursue maybe the $2,000 I'm targeting.
Okay.
You understand? So if I try the first time, my $20, it doesn't work that particular first trade. Yes, I've lost $20, but I still have 80 for this experiment.
Okay.
I try again. Probably the second time I try, okay, the $20 works to 40. Then I take it again, the $20 goes to about 70. At that point, that's where maybe a lot of people may not see. I could withdraw my $20 and keep aside. You understand? Then try to continue from there. Or start all over again with $20. I still have a lot of profit.
Yes.
So just mastery. The better you get at this thing, mastery, just even 2 times of compounding, you have gone way several times your starting point.
Wow.
So I tell a lot of students, instead of focusing on trying to make money, try to perfect the skill. When you perfect the skill, you can try experiments, even with smaller capital. You can try to take $1 to $100. You can try to take $1 to $50. Remembering that if you even get it right, just 2 or 3 times, your $1 is far, far, far from where you started.
Yes.
See how the thing works. It's far, far, far from where you started. And at the end of the day, even if you have grown your $1 to $40 and you now make a loss, the chances are, what have you lost? It's $1 that you actually lost. It's different from someone that actually works with maybe $500 and loses $500. There's a difference. If you were growing $20 to $2,000, and by the time you go to $1,000, you now lost maybe $800. Guy,
you are still in profit.
You are still in heavy profit from where you started.
Yes.
You see the thing.
Yes.
So that's how much time we can take today and to run off. But I just hope you gained a lot.
I did.
So these are key things.
I did. So I should just focus on 10 to 11.50. And if there's any other thing by 3.
Before I forget, Tongo just mentioned by that 3.
Okay.
If I must trade, it should be that it's still consistent with the morning time.
Okay.
Meaning if in the morning it was a bullish day,
okay,
I want to see that by 3, it's still a bullish day.
Okay. So if it is no longer bullish,
if in the morning it was bullish, by 3, it's now bearish.
Okay.
Trying to trade bullish that will be a mistake. If you watched yesterday, morning and evening were still the same. was still buying.
Yes. Yes.
As at this point, for today, I can see that Euro USD is quite bullish. Pound USD is let me see.